for that feedback. Good. All right. So I'm going to pick up the pace a bit. Don't worry, this is going to be recorded, as you can see. So if you don't catch up with anything, you'll have a link to the video where you can go back, watch, and refresh your understanding. We're going to be talking today about stable growth with something called stable coins. Now, we've talked about stable coins before when we started these conversations about cryptocurrencies. But we'll revisit them again at this time because I think there's some additional insights that you need when you are approaching the cryptocurrency markets so that you're able to maximize the capital that you are deploying in this space. Okay. Now, what do I mean by that? Chairman has done a very, very good job of the introduction, right? This chart is a chart of Bitcoin, the price of Bitcoin from January 2021 until now. And just look at, the price excursions that we've seen. We've gone from 28,000, like you said, up to 63K, came down to 30K, went up to 69K. Now we're in the 37K. Now, I can tell you for free that this chart mimics the blood pressure of several people who are investing in cryptocurrencies, actually the relationship is inverse. When the price goes up, everyone's blood pressure is normal. When it is dropping, then your blood pressure is rising. So there's an inverse relationship between this chart and your blood pressure if you do not have the right education. Okay. Because I remember, like he said, when Bitcoin was approaching, 68, 69K, in fact, social media was on fire. We had all kinds of numbers and price projections, 100, 200,000. But, this is the current reality, right? We're at the $37,000 mark right now. And that's how we're going to start. We're going to start with 4 things that I think you need to remember when you are approaching the cryptocurrency market. The first thing, like he said, when he talked about Shiba, is majority of cryptocurrencies are not useful in the long term. Okay. So the last place you want to go to get advice on cryptocurrencies is social media, right? Because in the vast majority of cases, those people who are promoting nameless cryptocurrencies, they own them or they are in partnership with people who develop them. So they got in really early and they are looking for the latecomers who will come and drive up the price so that they can sell and make money. Okay, don't be that person. Invest in yourself. The second thing, and this is really important, do not be emotional about any cryptocurrency. If you look at young children, where they're really young, maybe less than 4, if you give that child a toy and you say, give me back that toy, the child keeps holding, no, and then is crying and somersaulting on the floor. That's what it means to be emotional about the cryptocurrency. There are people who have bought Bitcoin and they're like, in my entire life, I will never sell this Bitcoin because I think it's going to 1 million. It may get there, right? But you saw that chart I showed you. That's how the journey is going to be before it gets anywhere significant, and that's how your blood pressure will be oscillating. You're like, hey, is it going to 0 now? So don't be emotional about any cryptocurrency. Know when to get in, which is the next point, and then know when to get out, whether it goes in your favor or it goes against you. And then the last thing I want to talk about here is treat every claim you see on social media as hypothetical unless it happened in your own account. On social media, you hear all kinds of fantastic stories. There's a gate man that sold one leg of his shoe, used it to buy Dogecoin, and is retiring as a billionaire. Fantastic story. Okay, that's fine. We don't argue with the story. That's not the reason why you go and buy Dogecoin, or indeed any other cryptocurrency. Just treat that as hypothetical. Okay, unless you're looking at your own account and you've seen how it has grown, right? Every other claim you're reading, please just treat it as hypothetical. What's really one word that you can use to summarize these 4 points? Okay, it's education. without the right education, you'll be doing what the masses are doing and you will get the results that the masses are getting. All right. Now, let's remind ourselves of something we talked about last week, Tuesday, if you were here. We talked about, using a strategy to profit from cryptocurrencies, whether market goes up, whether prices go up or down. And I used this, hypothetical example to show you that even if prices aren't really going anywhere, right? If you have the right education and you know when you need to buy or sell, right? You can, over time, compound your initial capital that you've deployed. So you don't need to hold your cryptocurrency and wait for it to get to, as they say, the moon. You can compound over time by taking advantage of price movements. And that's what you saw with the tool that Chairman shared. So let's just go over this example in a minute because we're going to set the stage for what we're going to talk about in the rest of this conversation. Remember I said, let's say you're starting with $100. I just want to make the numbers relatable so that you understand what's going on here. And there's a certain cryptocurrency, you've done your research, it's called DBN, and the current price of DBN is $100. You have $100. Guess what? You can buy 1 DBN with your $100. So what you're doing is you've taken $100 and you've used it to buy how much? 1 DBN, because 1 is $100 at this point. At point B, the price of DBN has gone to $200 for 1, right? So that DBN you are holding here, that you bought here, is worth $200 at this point, at point B. Then remember what we talked about last Tuesday. We said at this point, this is when you sell. Okay, so you take your DBN, you sell it to dollars. Now, in practice, what are you really doing at this point when we say sell? Okay, well, what did you do here? You took $100, you bought 1 DBN. At this point, you're taking your 1 DBN and you want to convert it to dollars. In practice, one of the ways you would do this is to convert this DBN to something called a stable coin. Okay, now we've talked about stable coins before, right? Remember that there's 2 broad classes of cryptocurrencies. They are the ones that vary in price. Okay, so I showed you a chart of Bitcoin, and you saw how Bitcoin went from 28K in the first of last year up to 60K, came down to 29K, went up to 69K. So that's a volatile digital currency. The price varies, based on how market participants are reacting to, their perceptions of the value of the cryptocurrency. And I've just given 6 examples here. Don't worry too much about the names if you're new and you don't really know what all these things are. But for the veterans on the call, obviously, all these other examples of digital currencies. The point here is, in this group of cryptocurrencies, the price changes with time. Now, let's come to this other group where we talk about stable digital currencies, okay, also known as stable coins. Here, the price is pegged to some other assets. Now, in this case, where I have these 6 examples here, these ones are all pegged to the US dollar. So 1 USDT is equivalent to 1 US dollar. 1 USD coin is equivalent to 1 US dollar. So these are stable coins. Now, you might wonder, okay, the price doesn't change with time. So why would I be interested in holding stable coins? Well, you need to think about how the stable coins work, because in my opinion, stable coins are probably the most underrated class of cryptocurrencies that we have. People rarely even think about, it's a stable coin, price is not moving, so why am I going to hold it? Okay, now let's go back to that previous chart and then let me show you how stable coins fit that picture. Remember how this strategy works. You buy a cryptocurrency at a low point, you have a tool that gives you a signal, okay, it's time to buy. You're using your real world money to buy cryptocurrency. And then when it gets to a point where your tool is telling you it's time to sell, you are converting that cryptocurrency into a stable coin. Why are you doing that? You're doing that because you expect price to fall to some point before it begins to rise again. And when price falls, you have money to buy more of the cryptocurrency that you're interested in, that you believe has long-term value. Now, the time difference between point B and point C, nobody really knows. But if you have the right education, two things will happen. One, at this point, you will be holding a stable coin. You will be holding dollars. And you'll basically be waiting for a good opportunity to set up so that you can put the dollars to work and get even more money. Let's bring back that chart of Bitcoin and let's just illustrate roughly how that would happen. Okay, so the idea would be, you use dollars to buy Bitcoin at this point. Let's just ignore this one. And then somewhere in this region, you're selling Bitcoin, for dollars, and you're holding dollars so that when Bitcoin comes all the way down and is starting to make a move back up, you can get back in, okay, and buy even more Bitcoin. By the time Bitcoin becomes valuable again, you're selling it into a stable coin. And at this point where the whole world is crying, well, most of the investing public is crying, you are holding dollars, right? And you're waiting for this next move up to happen. So that's how this works. Instead of you buying Bitcoin here and then tracking your blood pressure, instead of the price, you're basically using a tool to tell you, okay, I bought here, I switch to dollars, I'm holding dollars. When I see a good opportunity, I buy more Bitcoin because I have more money. When Bitcoin goes up, I have more money, I sell that into a stable coin, and I'm waiting for the next opportunity to happen. Now, the truth is, between this point where things are dropping and the next move, it can be a few weeks, it can be several months. So what are you going to be doing with your stable coins? Are you just going to hold stable coins, sit down on your hands because you're waiting for Bitcoin to make the next move? That's one of the powerful things about cryptocurrency. Because if this was the price of a stock now, maybe like Apple or Tesla, or let's bring it home, right? If you're in Nigeria, if this was Cadbury, MTN, or one of the other companies that you bought their shares, when this price is going down, you have one of two options. It's either you sell your shares and you exit the market, or you believe that the thing is going to go up and you're just waiting for it to go back up. But with cryptocurrency, you don't have to do that, right? Once you're holding dollars when things are dipping, you can put those dollars, those stable coins to work and earn money, right? Such that when the market picks up, you bring even more stable coins into the market to buy even more cryptocurrency for the next ride up, okay? So if that's making sense, please put a 2 on the chat, right? So let me know that you're with me, or if I need to go through that again. If I need to go through that again real quick, put a 3 on the chat. Put a 2 if it makes sense, or put a 3 on the chat if you need some more explanation. All right, okay, good. So that's the idea. So that's how I want you to think about stable coins. Don't just think about stable coins as things you hold and you just hold them and you don't do anything with them. Think of them like these are digital assets, and even though the price, I'm not losing value when prices are falling when I'm holding a stable coin. You need to think about what else can I do with my stable coin so that I can get even more value out of them. And that's what we're going to talk about today. Okay, so let's talk about 5 ways, right, that you can use stable coins. Okay, and I'll go into examples for the last 3 as we bring this to a close. One of the first things I want you to understand is Just by converting your fiat currency into cryptocurrency or into a stable coin, right, you are already better than more than half of the investing public, especially people who are doing two things. They are earning in Naira and they are investing in Naira. No, let me show you something just to put perspective, right? It will amaze you the number of people who invest in T-bills or treasury bills, right? Why do I say this is amazing, right? Because for some people, they say this is very safe, this is very secure, so I'll just put my money here and I'll be comfortable. Okay, why is this a bad idea? Right? One, you're doing a Naira-based investment, so you are already fighting against the tide. Okay. Now look at 30-day treasury bills for 3.25%. If you're here and you trade binary options, please do not laugh. Okay. I mean, there was a point you did not know this was possible, but I know that you can make 3.25% in a day with binary option. But it's okay. It's okay. There's people here who still invest in treasury bills and they are getting 3.25% a year. And I kid you not, every time this thing is released, it is oversubscribed. And you have to ask yourself, who are the people who are investing in treasury bills at 3.25% a year when inflation is 15%? So what exactly are you doing? You're essentially making money available to the government at a discount. So the government is not really paying you. You are paying the government, when you are investing in treasury bills. Okay, that's something you need to think about. So you say, okay, no, I'm a sophisticated investor. I invest in, dollar denominated, investments like Euro bonds, Oh, very good, very good. Okay, so what are we seeing for Euro bonds here, right? So we are seeing Euro bonds 3%, 3.46%. There are some closed groups I'm aware of where you can do 12%, 13%, but it's with a lot of conditions. So you can't withdraw your money until maybe after 6 months or 9 months. If you want to withdraw your money, you need to write a letter, then the board will look at it and will decide whether it will give you your own money or not. What you're really doing there is you are paying the fund manager to underperform. That's what you're doing, okay? With 3.46%, but everything, what is the title you see here? This thing is fixed income best sellers. So these are not the worst performing investment opportunities. These are the best sellers that people are investing in, right? So this is the context I want you to think about. People doing fixed deposits, people doing treasury bills. This is what they are getting, right? So how is cryptocurrency able to give you more leverage than this? At least with cryptocurrency, you have a chance to beat devaluation, you have a chance to beat inflation. Remember what happened to the Naira from the start of the pandemic till now. If you're earning in Naira, you just lost about 50% worth of value, okay, for what you're earning, right? Just from March 2020 till now, you've lost about 50% of value, right? So with converting into a stable coins or into a dollar equivalent, you're able to, prevent against that, protect yourself against that. The third thing you can do with stable coins is you can protect your cryptocurrency portfolio against adverse price movements. In this space, you don't just hold things eternally and wait, for them to hit some absurd price target that you have 100 times, 300 times. That can happen, but that should not be your planning basis. Okay, you need to know what to do when price goes against you so that you can protect your cryptocurrency portfolio. Right? So when the market is the way it is now, a significant portion of your cryptocurrency portfolio should be in stable coins right now. Okay, and not just sitting there. We'll see examples at the end of what you can do. And then you can preserve profits when you invest in volatile cryptocurrencies and the price goes up. So what does that mean? Let's go back to the Bitcoin chart. Okay. Let's say, you were in the environment, you did the analysis, you had access to education, and you bought Bitcoin around this point, right? Let's not even be greedy. Let's even say you got to this point and you said you wanted to sell. What you'll be doing is you'll be converting your Bitcoin into a stable coin, and you'll just hold your profits and preserve your profits that way. So that way you don't need to see Bitcoin come all the way back down and you lose all the profits that you could potentially have had. That's what you can do with stable coins. But the ones I'm going to show you examples real quick is this last one. You can earn predictable yield while you're waiting for better opportunities, right? So remember what we said. Okay, once you convert a volatile cryptocurrency into a stable coin, right, don't just hold that stable coin, put it to use. Let it do something so that you can earn. Okay, all right, let's look at four examples actually, real quick. Okay, now just because of time, I'm going to show you the examples, but hopefully you understand that this is what we do in this community. We look for projects that make sense. We educate ourselves. We get access to a community that gives us education, and then we're able to go implement these things, because if you just watch this and you do nothing, there is no benefit. Okay, all right. For the veterans on the call, you know what we're looking at now. This is Anchor protocol, right? So this is the first example that we're looking at of what you can do with stable coins. Okay, if you come to the end section, you've heard me talk about this before, or if you're new, let me explain what's going on here. Anchor protocol is like a savings account, a cryptocurrency savings account. Okay, so imagine if you've taken some profits from buying Bitcoin or some other cryptocurrency. What can you do? You can bring that stable coin here to this savings account, deposit it, and earn 20% a year in dollars. 20% a year in dollars. Where was that site again? I mean, there's nothing on this page that is double digits. Nothing. Everything is 3, 2, 3, 2, 4. The best is 8. Then you have this 5-year bond, which means you don't see your capital until 5 years, right? Which will give you 10% per year. 5-year bond. Okay. Whereas if you just had the right knowledge, you're earning 20% by depositing dollars in a cryptocurrency savings account. Okay. So imagine what the Naira-based investment managers are doing for you. Okay. You don't even know whether they are deploying your money here and then they are making profit off you by deploying it here. But here you can do it yourself, right? And earn 20%. And if you're so worried, what kind of site is this? I'll show you two things, right? This site you're looking at that looks very simple to design has 10 billion US dollars locked. So it's not your $100,000 that will change anything on this site. Okay, there's $10 billion locked here. Sorry, this is not my money. This is all the money invested on this site, just so we are clear. All right. But if you come here and you deposit here, you will earn 19.5%, okay, approximately 20%. If you're really worried, guess what? You can purchase insurance. And insurance is currently at 3% a year. So even if you remove 3% from this, you're earning approximately 17% a year in dollars, by depositing your money here. Now, if you're here, just think about that, your bank account in Naira. No wonder your account officer calls you to greet you every morning. Thank you, sir. I mean, your account officer is getting promoted because of your balance in Naira that you are holding. Okay. But now right, that you can convert that Naira into US dollars, protect against devaluation, protect against inflation, and earn 20% a year in dollars, right? So that's one thing that you can do. Now, let me talk about something that I haven't talked about. For the person asking the question, this is APY. So that number is automatically compounded. So think of it like your savings account. So they keep adding to the balance that you have on file. until at the end of 12 months, you will get 20%. So that's how this works, okay? All right, so let's talk about something that we haven't really discussed for the veterans on the call. This is another site called Platypus, okay? And I'll put the link, I'll provide these links so that, you have access to them. So what can you do here, all right? This is another site that enables you to deposit cryptocurrencies, stable coins, right? And you can earn yield on the stable coins that you're depositing here. So you remember all these things here: USDT, USDC, DAI. If you come back to our okay, so USDT, USDC, DAI, these are all examples of stable digital currencies, right? Okay, so on this site, let me go to that page that has the links so that you can take a screenshot of this page, because these are all the examples that we're looking at. We've looked at Anchor Protocol, we're looking at Platypus Finance right now. And then we'll look at YieldYak and Spirit Swap as we round this up real quick in the next 5 minutes or so. But on Platypus, I want to spend a minute or two just giving you like a high level overview of what's possible here. And then you can go do additional research just to figure out how this thing works. Okay, but what's interesting about this site is, what are you depositing? You're depositing stable coins. So the value of your investment is already preserved, right? It's not going to go down. But you're going to earn two ways, right? You're going to earn something called a base APR. So you're going to earn 5% a year, which is not a big deal. But this site enables you to purchase a volatile cryptocurrency called VEP2P. And as long as you own this cryptocurrency, they will boost the earnings that you are getting. So in this live example that you can see that I can boost this 5% by an additional 33%, depending on how much of this cryptocurrency I am holding. Okay, again, don't worry about, there'll be a separate session where I'll go into the details of how you can get in here. But now just focus on the concepts, the principles. That's what we have time to do. So you can see that my own boosted APR at this moment here for USDT is 18%. And this 18% is on top of the 5%. So essentially I'm earning 23% a year on my USDT that is deposited here. Again, while I'm waiting for a better opportunity to set up. Okay. Another example is with this one, DAI. This is another stable coin. I'm earning 20 plus 8%, 28% on my dollars here, while I wait for a better opportunity to set up. So this way, I'm not just sitting down and waiting for things to happen, right? I'm actually putting my dollars to work on this site. And then if I see a good opportunity, if I see Bitcoin, starting to make an upward move, I can pull out my funds from here and then go invest in whatever cryptocurrency of my choice. Okay, so that's how this one works. You deposit stable coins and you're able to earn boosted rewards on the dollars that you deposited. The third example is YieldYak, okay, which we've talked about before. I'm just going to go through these things very quickly. You may need to go through the recording and just review how these things work. But like I said, you do need detailed guidance about how do you get involved in these things and why are these things the ones that we are talking about? Why are we not talking about other opportunities? So there's YieldYak, and I'm really just focused on stable coins. There are other things, there are volatile currencies you can put on YieldYak, but look at USDT, okay, at 8%, if that interests you. USDC at 9%. But the example I really want to show you is where you have two stable coins together, because you're able to increase your yield that way. So let me scroll down to the point where those examples exist. Not you. AVAX, GMX link. Let me just scroll down. We should see. Nope, not you. Where are those things? Scroll down, Maxi. Sorry, yeah, many of these things. Nope, that's not the one I'm looking for. Sorry, let me just go back up and search for USDC. USDC AVAX. Okay. Oh, okay. Yes, good. So these are the ones I'm looking for. So the example here, right, is where you're able to deposit two different cryptocurrencies and you're able to earn yield on both of them. Okay. So remember that previous example, you could deposit only one cryptocurrency like USDC or USDT, right? Stable coins now. The reason I'm focused on stable coins is so that whether Bitcoin is crashing to whatever it is crashing to, or whether it's rising, your capital is preserved, which is what you want to do in this kind of environment. You want to preserve your capital. Okay. So you have options here that you can use to deposit two different cryptocurrencies and earn yield on them at the same time. Okay. Now, because of time, let me move on to the last example. Now, okay, I'm going to need to make a change to this one so that we can remember, I'm not talking about the how here. I'm really focused on what is possible. Okay. How the step-by-step instruction for getting into these things, we'll have, okay. Let me wait. We'll have a separate conversation where that happens. Okay, this is taking a while to load, but hopefully you can see one example up on here before it loads. So this is DAI stablecoin, USDC, another stablecoin, where you're earning 14%. Okay, and there are other examples like that on this site called Spirit Swap. What's the whole message here, right? When you're looking at these examples, the message here is you can maximize the efficiency of your capital by taking advantage of price swings. So when price is going to the downside, guess what you can do? You can switch from volatile cryptocurrencies to stable cryptocurrencies. And while you're waiting for good opportunities to set up, you can deploy those stable coins in places that will earn significantly more than if you were doing Naira-based investments, fixed income investments. You can do, or even, dollar-denominated investments. Most of the popular ones will pay somewhere between 7 and 13%. I've shown you multiple examples of where you can beat that just because you have the right education. Okay, so that's what the conversation I wanted us to have this evening. Just understand how to manage your portfolio here so that you're not at the mercy of price swings. Okay, you're making the best of everything that's happening. And remember, it's access to an environment where you have the right education, you have the right tools that will give you the information on how to analyze the markets yourself and how to get in so that you time these moves in a way that maximizes your capital. That's really what helps. That's really what you can't discount in this environment, what we have. Okay, so understand that you can use stable coins to just continue to grow your account, your portfolio, and have stable growth really using stable coins. So let me see if we have any questions, and if we don't have any questions, I'll go ahead and turn this back to Chairman to just help us wrap it up.
Awesome, awesome, awesome session. Wow. Guys, we told you we'll be sharing with you how to profit even in this market. Doesn't matter whether it's going up, it's coming down, you will profit. Somebody is asking, what about converting it to fiat because of CBN scrutiny? We've been doing conversion to fiat for years and CBN have not scrutinized us. Simply, once you get started, we'll show you how. It's very simple. We do transactions in the good numbers, good numbers, good numbers. So get back to whoever invited you here and get started today. And if you're already part of this platform, get educated, utilize what you paid for. Utilize what you paid for. Get started. For all of you that are new, take advantage of the promo. You are getting started at $185 as against $235, and that ends on Friday. Enjoy while the offer lasts. Let's go, let's go, let's go. God bless you. Enjoy the rest of your evening. Bye-bye.